the balance sheet, what income statement that company is exhibiting. We care more about how it moves. All right. So we study stock chart patterns and movements to try to predict or try to forecast future movements. So if you look over history, and this is kind of what Jason had alluded to in terms of inter-market analysis, right? When US dollar goes up, gold goes down, right? You look at those type of correlations, it will happen in the future again, right? So when you do see that happen, like what Jason mentioned, you see the US dollar going up and you start to see gold going down, well, what are you going to do, right? Are you going to buy gold, right, when the US dollar is going up, right? So those are the type of things that why technical analysis is so important, and if you can mix that with fundamental analysis, you got the best of both worlds. So what I wanted to do kind of today was share with you some tools that we use, and again, this is very, very basic stuff, but this is actually something that we use on a daily basis, is what we call support price level and or resistance level, right? Support and resistance. So you know what the definition is. Support is something that it's a foundation, right? It won't necessarily go down that easily. So support level or support price level, an area where buying starts and selling subsides. So if we say a stock has a $10 support level, meaning the stock has gone to $10, now it's sitting at $10, and it could hold that level. Now, if it doesn't hold, that support breaks, then we exit. So if you're looking to buy a stock or buying an instrument, you want to look to see where those support levels are, and if you can identify those support levels, if they do hold and they go back up, right, it tells you, hey, I'm safe. But if that support level, when you get in right at the support level and it breaks that support level, you got to tell yourself, hey, support's broken, I got to get out of my position. So what support level, price level here, I'll just show you. You can see here on the chart, right? Stock's gone up right here, goes back down here, hits this level here, goes up, hits it back here. Sure, this serves as a support. Goes back up a little bit, hits it back here. And look what happens, right? Hit it once, twice, 3 times, and that's why we had this move here. Because traders know that, hey, this level here, whatever this price level here is, it's holding. It's not going to go down. And if it does go down, we get out. Right? So then that's why. And look at now, if you look at this chart, it's gone up quite a lot. It's going back this here. Now, this is a better buying opportunity than right here, right? Or than right here. So that's what technical analysis helps you identify where those levels are. Now, resistance level, oops, actually, I forgot to change the chart here. Resistance level is actually the opposite, where an area where selling starts and buying subsides. So if you're holding a stock and you see that it reached $50 level, tried to go through, couldn't go through, went back down, tried to go back up, hit $50 again, can't go up again, you know that this is a resistance level. So if you're holding that stock, you might want to lighten your position, or you might want to just sell your position. So that's where technical analysis will, again, help you decide when's a low-risk entry point to buy, when's a low-risk entry or high-reward scenario to sell at, to take your profits. So when a lot of people ask us, we're traders, what do we do? I would like to think that, we have 2 types of traders, or what we call 2 types of active traders. Have some of you heard of swing trading, or swing traders and day traders? Can I get some hands? Right. Okay, so a few. So for those who don't know, I'll give you kind of a definition, or kind of give you an example. What do we actually do? Right? Has swing traders and has day traders. So a swing trader, a trader who finds situations in which a stock or any financial instrument has the potential to move in a very short period of time. And when we say short period of time for us, what we're talking about, we hold it for a few weeks, it could be a few days, a few weeks, or it could be a few months. But definitely no longer than 1 year. So we're very short-term traders. We use charts to look for any stocks or any opportunities with short-term price momentum. So as a swing trader, we are what we look for is we're looking for momentum. So if a stock's going up, as long as it doesn't break that momentum, we keep holding it until it stops going up, starts going down. That's what we look for. We're not looking to capture buying at the bottom and trying to sell at the top. We're just looking to capture opportunities right in the middle. And that's the easier way to make money. And a swing trader is perfect for someone who has a full-time job. And the reason why I say that is, I've talked to a lot of you, is you have a full-time career, you have a full-time job. How can I actually do this also part-time? So it's perfect for people can do it part-time. You don't necessarily need to be in front of the computer all the time. What you want to do is, for swing traders, you just want to take control of your investments. And I think that's the reason why a lot of you guys are here today, is you want to fire your fund manager or people who are managing your portfolio that's not getting the returns for you. You want to take control, right, of that and managing your own portfolio for yourself. And I can probably tell you that I don't have some of the studies here today to show you, but a lot of fund managers do not even outperform just the general market. So why are you paying them to manage your money when they don't even meet the performance of just the general market in general? So that's where we love to work with a lot of swing traders who want to manage their own portfolio for success. And so as a swing trader, we just look to trade a few ideas a week, or it could be a month. It's not actively trading it every single day. Now, for those who are looking, you want to make it a career, you want to do this full time, then this is what we call the definition for a day trader. Okay, so day trader is someone who holds stocks for a very short period of time too as well, but we're talking about could be as little as minutes. Okay, it could be as hours, and the difference is a day trader does not hold their stock overnight. So when the financial markets close for whatever instrument that you're trading, when the markets close, let's say here at 1 p.m. Pacific Standard Time, the day trader sells his position. So the benefit of that is it doesn't matter what happens tomorrow. Let's say we're trading today. It doesn't matter what happens tomorrow. If you make money in the financial markets today, that's in your pocket. And I can tell you, a lot of day traders did not get hurt with what happened in terms of the crisis or the 9/11 attacks, where when the market opened, the stocks were down 50%. But a lot of investors were burned. So I mentioned a little bit, day trading, very, very good for whether you're full-time, part-time as well. You have the opportunity, and I think this is where the internet has changed everything, is nowadays you have all the same tools, the software, computers, the internet. You have the same tools as everyone who's on Wall Street. So you have the same tools, so you have the opportunity or the potential to make money every single day. And that's really the power of knowledge, power of experience. It could be for someone works for a few hours a day. Markets here open early, 6:30 a.m. Eastern Pacific Standard Time. I usually get in the office by 5:30, get ready for the day, and I'm usually done by about 8:30. So if that's something that fits your schedule, you're an early morning person, or even this is just trading the U.S. markets. You could be trading the currencies. You could be trading at night, just for a few hours a day. That's where the flexibility lies. Now I want to share a success story with you, and is a gentleman actually sitting in the audience. Andy, do you want us to just stand up for a quick? I know Andy's very little shy. And Andy's my partner here in Vancouver, and I'm so honored to be working with him. We started Surman Traders last year, and he's one of my most successful students, and he is one of my inspirations in terms of starting Surman Traders here in Vancouver. His occupation was a full-time civil engineer. He traded part-time, and a phenomenal success story. He's been focusing specifically on trading gold and silver, and he really did incredibly well, and I'm always in awe in terms of the performance that he's done in 2011, starting with about $1,600 and turning to about $1.7 million in 5 months. So incredible success story, and it's not meant to say, hey, Andy's great. It's meant to show you that this is the potential. This is the potential that as someone who not necessarily has a lot of financial knowledge, right, prior to us working together, it's a potential that you can make a lot of money in the financial markets. It's whether you have the knowledge, you have the experience to be able to capture those opportunities. Again, I have another success story. Again, I'm so proud of my students that I work with. Frank is a student that I worked with in Toronto. He's a full-time IT guy, systems administrator, so he manages the networks for people. And he also discovered a passion for trading. He loves the financial markets, and in fact, he quit his job to become a full-time trader. And he had started off with about $5,000 about 3 years ago, and just last year became a millionaire, made $1.2 million. This is turning $5,000 to $1.2 million. And what's also, this is an incredible feat that he's done, but what's incredible for some of you, do most of you know what's a TFSA account, a tax-free savings account? Okay. For those who don't know, the Canadian government started this program a couple of years ago, about 5-6 years ago, to encourage people to save and invest. And the money that you invest inside the TFSA account, you are not taxed at all. So if you put $1,000 in your TFSA account and you make $1 million from it, you're not taxed 1 single cent. And that's what Frank's done. So it's, again, a very powerful tool out there, again, which, living here in Canada, we have these type of incentives, these type of setups for people to be able to take advantage of. So why do these two individuals have so much trading success? What are some of the keys? And I really thought a lot about it, having worked with a lot of traders over the years, and we nailed it down to about 3. First thing is obviously you need knowledge, you need education, you need to obviously understand how the financial markets work, right? You need to know what the markets are telling you. But is that just the key ingredient that you can read all these books, you can learn, watch a lot of videos, take lots of programs, all that stuff. Is that also enough, right? But it is the foundation. It's the foundation that you need to at least start off with. And I'm so happy that Jason's invited me to be here is to share knowledge, right? Share knowledge, share our experiences with all of you. So that's really one of the first key things in terms of steps to trading success. Okay, understand? So understand the financial markets, how they work. Understand the rules, the terminology. Understand what strategies that you're good at. What are some of the key things that you look for, and our basis is understanding more technical analysis along with fundamental analysis. Number two, and I think this is very, very important. In fact, probably I would say more important than the first step is you got to know yourself. I mean, I can tell you one thing. Let's just say here, I tell you a stock idea, stock pick. Okay, I know we're not supposed to, right? But let's just say I tell you, hey, buy Apple at $500. I can guarantee you one thing, that all of us will all have different trading results from that. And let's just say, for example, sorry, let me take a step back. I say buy Apple 500, and then Apple does go to 500, and then suddenly it goes up to $600. I can guarantee you that all of us will have different results from each other. Why? Because we're not the same. We're not the same person. We have different risk tolerances, right? Some people are very hesitant. They buy, let's just say, 10 shares. Or some people are more risk takers. They go all in. Some people like to day trade it, right? They're just looking for small profits. Some people buy it and then they hold it. Some people have different ideologies about what the price is going to do, right? Some people sell early, some people sell later, right? So it all depends, and that's kind of why I started thinking is when I first started training my first couple of students in 2005, 2006. That was during the whole technology boom too, the Web 2.0, and everything was going on. All the technology stocks, Apple, Google, Research in Motion at that time. And I had a gentleman sit in the audience or sit in my training session. He couldn't understand. He couldn't imagine trading those type of volatile, up and down type of stocks, because his risk tolerance was maybe perhaps a little lower, right? Not saying this, but he was closer to retirement age than some of us, and he had a family to support.